The point he makes that this was a unanimous decision in response to the COVID virus, the coronavirus that is underway globally, indicates that yes, they had to respond to that. But he's also saying that there's other things that have opened up the scope for this. The Brent crude oil price hovering around the $30 barrel mark for the last few weeks or so, and of course much better weather conditions having an impact on food price inflation and the inflationary outlook more broadly in the medium term. Of course their model would have anticipated maybe 50 basis points for the entire 2020, and so maybe this 100, one would argue, is probably on the back of a lot of pressure coming from the COVID-19.
All right. Rand weakness, I mean, do you think that influenced the decision to a large degree? Because the Reserve Bank also tries to, it's ostensibly a constitutional duty is to protect the value of the currency. We've seen the Rand come under huge pressure, emerging market currencies, that whole basket under pressure as as investors in the developed world, in developed economies, try to move away from sort of perceived riskier assets. Do you think the Rand was a big factor in this decision? That's why they did 100, not 150?
I think it certainly was, but also, the governor is quite cautious to add that in many ways he sees this as short-term volatility that is quite characteristic of the South African Rand. A lot of this is coming through capital markets, where we've seen, South African bond yields spiking up and a massive sell-off in global equity markets as well. So a lot of this is really about short-term market movements, whereas a lot of the decisions that monetary policy committees around the world make on the basis of future inflationary expectations rather than what's happening or what has already happened.
Obviously, our inflation and our interest rates are higher than in many other parts of the world. I mean, the question, of course, is, does that give us more room to move? How should we be reacting, considering that our situation is actually quite different to other places?
I think it does give us a lot more space to maneuver, and that's why I would have preferred 150 basis points rather than the 100. But I think what is important to consider is a few internal factors. One of those is the pricing of electricity. We saw the showdown between Eskom and the Nexa, and what that is going to mean in the interim and in the medium term for administered prices across the entire economy, and what, of course, the outlook looks like for food prices. But in addition to that, if oil prices remain in the territory that they're in, I think there will be greater cause and greater pressure in the coming meetings of the Monetary Policy Committee for similar cuts of this measure, and a lot of that is also going to be determined by how severe the spread and the intensity of the coronavirus is.
We know that for many households, it's likely now that they're going to have less money to spend. This is going to put a little bit of cash in their back pockets, but it's not going to be a huge amount.
Look, I think, Stephen, it certainly will. If you think about those who are credit-active consumers, who have a mortgage, who have car installments, or who have any other credit obligation month to month, this is certainly going to have a major impact for them when it comes to disposable income. But think of this not only as a sole decision. Think of it alongside other policy decisions. We heard some of the murmurs about what might happen to UIF and potential payment holidays, even on insurance. So if this can be seen as part of a coordinated package of interventions to try and mitigate the impact of a novel coronavirus and the impact that that's had on the global economy, then it will certainly come in welcome.
Yeah, well, I mean, on that, we haven't had that sort of bigger stimulus plan. There was a suggestion in that big press conference by government with, 20 ministers on Monday. It was Tito Mboweni, the finance minister, his birthday on Monday, as it happens, in which he suggested that there would be something coming from government. We don't really have that yet. And I realize that managing an economy, any economy is complex, ours perhaps more so because of our racialized inequality. But someone, somewhere, needs to do something.
And Stephen, we've seen, we've certainly seen across the world that the need for a very quick, rapid response to this is able to mitigate the exponential spread of it. And so any action that we take has to happen soon rather than maybe go through the rigmarole of bureaucratic procedure. But what is becoming quite clear is that there's a lot of hurdles that have to be gone through for some of the concessions to be drawn out from the private sector. I was speaking to somebody from the Banking Association over the last day or so, and he was saying, for us to as different competitor banks to even meet and discuss whether or not we can give, payment holidays or any other form of reprieve to our consumers, we first have to get the go-ahead from the competition authorities. So what really needs to happen here is for all of the things that need to happen procedurally, all of those things to happen in a very seamless and a very rapid manner, so that we can have that announcement of what that stimulus is going to look like. And so everybody's quite clear of what impact it's going to have in their sectors, in their communities, and in their households.
You raise an interesting point there about tone and messaging, always very important in financial markets. The governor always chooses his words carefully, and so he should, considering the position that he's actually in. Do you think he set the right tone, that the monetary policy authorities are keeping a very close eye on the situation?
I think it did. He was very balanced in his exposition of what he saw as the opportunity and the space for a bit more accommodative monetary policy, but also was very cautious to underscore some of the risks to our growth outlook and the risks to our financial services sector more broadly. And I think, this was him saying, look, yes, we do have this situation now, which is, a very rapid shock to life as how we know it and the economy, but it's very important for us to consider the path that we're on, and the quarterly projection model that he was speaking to is maybe the path that will continue to guide some of the decisions of a monetary policy committee that, in my view, has been nothing short of conservative.
All right, Ayabonga, I mean, we all know that even in the era of COVID-19, what happens to the Chinese and the US economies really has a big impact on us. If they get, the old joke used to be that if they sneeze, the rest of the world catches a cold. I don't think we're using that joke at the moment, considering what's actually happening.
Too soon.
But it is. But the real question, of course, is, both those economies are now in trouble. S&P said yesterday that they believe the US economy is already in a recession. That's despite the possibility of helicopter money being poured into bank accounts there. China, we understand, big change to their economy. All of that has a big impact on us, no matter what we do here.
Certainly will be. I mean, if you think about, Stephen, what we export to China, much of that is in our primary industry, in our economy, and the Reserve Bank governor interestingly mentioned that, some of our commodities, and one would think that it was mentioning the platinum group metals, have really had a good price environment. And we know that China over the last while has been able to really, capture much of the demand for some of those commodities. But even on the import side of things, we've seen factories in China close. We've seen ports, getting in fewer containers than what they're accustomed to. And that's going to have a massive impact on many sectors in the South African economy, whose inputs and intermediate goods and other working capital requirements are reliant on orders of, stocks, components, or even goods from China.
All right, Ayabonga Kawe, thanks very much indeed. Editorial contributor to us here at Newsroom Africa. More